Turning to business, Monday, May 29th marks the two-year anniversary of President Muhammadu Buhari taking office in Nigeria. Much of Buhari's term has been overshadowed by Boko Haram and plunging oil prices. Joining us live via remote from our New York bureau is Africa 54 business correspondent Jill Malandrino. Now, Jill, has Nigeria been able to tackle its key issues here?
Well, no doubt Buhari's health and the ongoing social and economic struggles in Nigeria give investors pause, but there are good things happening in the background. The overall Nigerian market index hit its highest in more than 10 months on Tuesday as investors responded to more favorable economic indicators suggesting that Nigeria may be slowly moving out of recession. The Buhari administration has leveraged on its goodwill to attract multi-billion-dollar investments and loans from China and Morocco. Buhari's April 2016 visit to China unlocked billions of dollars in infrastructure funding, and construction has started on the 150-kilometer-per-hour rail line between Lagos and Ibadan, the first major product of the collaboration.
Now, do you think investor confidence is coming back to Nigeria, or is this just a temporary bounce?
Well, that's a great question, and a chunk of it is hinged on Forex. The economy has been the major challenge of this administration. The CBN is reforming the Forex regime, and this has increased stability in the market. It's interesting to point out that many of these reforms have come while Buhari has been in hospital. Recall he was against this level of reform, but the CBN has created a new Forex window for investors and exporters. The data also shows that the window has attracted $1.4 billion in its first 4 weeks of operation.
So has the oil market really stabilized at this point?
Well, Nigeria may benefit from improved oil revenue as OPEC decided last week in Vienna to extend cuts in oil output by 9 months to March 2018 to further battle a global glut of crude. OPEC's cuts have helped to push back oil around the $50 a barrel level this year, giving a fiscal boost to producers, many of whom rely heavily on energy revenue. Recall that Buhari inherited crude at $38 per barrel, then it plunged to $26 in early 2016, which led to unrest in some producing countries, including Venezuela and Nigeria. So OPEC members said Nigeria and Libya would still be excluded from cuts as their output remained curbed by unrest. And that is why this balancing of oil prices remains crucial, even as Buhari preaches economic diversification.
Well, Jill, thank you very much, as always. That is Africa 54 business correspondent Jill Malandrino.